during the week, Treasury bills were oversubscribed in Kenya with the overall subscription rate coming in at about 104.2%, down from the previous 126%. Now, moreover, the equities market was on a downward trajectory with both the NASI and the Nairobi Securities Exchange 20 declining points, moving to about 0.2%, while NSE declined by about 0.8% to be exact. Now, for more on the market watch, Beatrice Mwangi, lead researcher at Cyton, joined us earlier. For more.
The economy has been very sluggish this year in general, and we've seen many investors now looking for more conservative areas of investment. So we've seen a more focus on government securities, given their bit of security or assurity in terms of returns compared to other sectors. So in terms of the T-bills, the high subscription has been due to investors looking at it as a more safe way of investment, or a safer way of investment. In terms of the marginal decline in terms of subscription, I think that's just a normal market change. I don't think it's anything alarming, but we expect going forward to see more focus on T-bills and all other government securities at the moment, till the end of the year probably, and even to the start of 2021.
Good news. Quickly moving away from there, we're going to go to the pumps. There, petroleum prices seeing decreases of about 1.3%, 2.1, 2.5. That's for petrol, diesel, and kerosene, respectively. Has that reflected on the consumer side?
Yes. So to start with, I think it's a plus just to see the commodity prices going down, and this is a plus for the consumers just to see especially the oil prices going down. It might not maybe be in the long term, but at the moment I think it's a plus for the consumers.
Yeah, well, why don't you think this is sustainable and could be long term?
We have seen the issue has at the moment has been the pandemic, which we have really not seen an end to it. As much as we have vaccines coming up, we still have countries or markets that are still attacked by the pandemic in a heavy way, and we expect this then to have a distressed market, uncertainties here and there. So we might not be able to enjoy maybe the low commodity prices in the long term until the pandemic is over. So this time, in my view, we'll have fluctuations here and there.
With the effects of the vaccines that have been discovered, oil prices have seen an upward trajectory globally. Now, am I being too optimistic by thinking, you know what, this could be here for the long run?
In my view, it's a green light, having the vaccines coming up, and not even one, not two or three. However, until they are actually adopted into countries, we'll probably just wait and see. It might take a bit of time, probably not in the short term. In my view, it's probably going to have a sustainable effect in the medium term. In our case here, for example, we've seen our Ministry of Health actually downplay it and say, we'll wait and see. We're not going to get excited about the vaccine yet. So then that means we might, even if it's actually gets adopted in other markets, then probably in some it would take a bit of time. So I think we can be optimistic, just not very excited in the short term. It's going to take a bit of time, probably in the medium term. But for now, it's a green light, and we'll expect these to be felt as economies just open up, with the hope that the vaccines will actually help.
Moving into the real estate market, this is your field of specialty. There seems to be a decline, but minimal. We expected it to be bigger than this, 6.7%. That's where it's standing in terms of revenue, and then 7% is what the previous figures were. So that's about 0.3%. People expected this sector to be the most hit, or one of the most affected sectors due to the pandemic.
Yeah, so to start with, the whole sector has been affected. The whole real estate sector has been really hit. Some themes more than others, and the hardest hit is not even the retail sector, it's the hospitality sector, which might take a bit of time to recover. In terms of the retail sector, in our case here, we've had some cushion against that has helped with the performance. For example, in many economies, we've seen retailers exiting. In the case of Kenya, for example, we've seen about 2 retailers actually scaling down significantly. However, at the same time, we've had other 2 retailers then taking up those prime spaces. So in that case, then it cushions the performance. However, in general, it's been a decline in performance, both looking at a country on a countrywide scale and even looking at our urban cities specifically. For Nairobi, there was a marginal decline of around 0.5% in terms of rental yield. And this was mainly attributed to a decline in occupancy rates and also a decline in rents.